What happens to rates during election years? Getting this question a lot coming into 2024, so we wanted to dive into the real details here and see what the data shows. The general consensus in the market is that, well, it's an election year, rates are going to get better. Now, what we can really look at is the data coming in from 1971 is where we start tracking this and seeing every election year since then. We're looking at both before, during, and after that election year and what actually happens with mortgage rates. We've broken this down between Republican to Republican, Democrat to Democrat, switching from Democrat to Republican and switching Republican to Democrat. We're trying to cover all the bases here, seeing if there are any real trends in the market. So here's the real kicker. Over all election years since 1971, there has been a nominal, basically no difference in interest rates coming in before, during, or after that election year. The numbers behind it are a 0.05% change in interest rates. So if rates were at 5%, the rates from that election are now 5.05%. So essentially no change in the market. What we try to figure out is why the expectation for mortgage rates to fall during election years. Well, the idea behind that is whoever is in the wants to get to the public and show that they can benefit them if elected. Now, one of the best ways to do that is housing. I think that's where the mindset really comes in. What we really see in the markets is this is more based off of the economy and the trends going in or after an election, not necessarily from action taken by the new president, but the market trends in general. So to wrap up, really, the external factors play a much bigger role in where interest rates go than the actual election itself. Now, it sounds believable, and that's really why we believe it, that election years help interest rates. But in reality, there is no pattern, no rhyme or reason behind elections and interest rates.